Josep Camacho, Eurocommercial. I have a question about valuations in Spain. We saw yesterday, I think, an important transaction, Vastnet selling their portfolio of shopping centers. And it was announced that this was made at 30% discount over valuations at the end of December 2013. My question is, how come valuers in Spain can make a mistake of 30% in just 1 month? Because the valuation was made at the end of December. And second and most important is, do you think, or it is right to assume for foreign investors that the value of the properties in the books in Spain are 30% overvalued in general?
They were sold last year, Parque Principado to Vinto and Canadian Pension Plan, and it was at valuation. The price that we sold, it's with no discount to valuation. So our experience in real market for that kind of assets is that there was no discount compared with valuation.
Valuation is not price.
No, nothing to.
I am a bit more familiar to that transaction, and you need to compare apples with apples and pears with pears. No? That structure, that isn't a structure, is effectively taking a position in a company where it has some conditions attached to it in terms of minimum investment, in terms of control provisions, etc., which effectively you are buying more, you are doing more corporate real estate deal than just a kind of a asset direct investment, which relates more to discount on gross asset value that we are seeing every day, also in UK and in other markets, which sometimes goes above gross asset value, but sometimes goes beyond, just depending on the nature of liquidity, and depending pretty much on what implies the structure you are buying, which is not the same as buying assets. Price values, of course, especially in a relatively liquid market, can have differences, even if it is a relatively recent valuation. But more specifically to that specific deal that you are mentioning, you cannot compare asset value to the value of percentage of a company, because what is behind in the structure, it is pretty different to just buying assets.
I think there was something wrong in the article you read, but I read the same article. And at the beginning of this transaction, the portfolio was at an 8 shopping centers portfolio, and finally the transactions was 6 or, I mean, there were 6 or 7, I'm not sure, but I think there weren't the 8 shopping centers that were negotiated at the beginning. And maybe because of that, there was an adjustment on the price from 180 to 160.
But one thing is, and I think it's also been misleading in Spain, you think of valuations and you can usually use cash flows and comparables. The issue has been for the last years is that there were no comparables. And correct me if I'm wrong, I mean, if you think of this kind of asset, when was the last time it was sold? Something similar to that. So if you're using old values, so I can understand that kind of thing. If the valuation had been based in cash flows, maybe you wouldn't read that kind of news. That's my guess for the explanation for that situation.